morning, traders from across the globe, and welcome to the 1087th edition, and that's a lot of videos of short-term trading live with Oscar Carboni, and that, if you couldn't figure out yet, is me. Traders, welcome, another installment. This video is being filmed on Sunday night for trading Sunday through Monday, and that would be September 7, 2013. Traders, before I get into it, as we know, futures trading can be extremely risky and cause substantial financial loss. If you do not understand this game, if you do not recognize that a stop can absolutely be your best friend in this business, and if you do not place stops first, do us a favor right now. Get up, run as quick as you can, close your trading account, and stop trading. Because if you don't place stops and you don't place them first, you'll end up on the list of traders that have their accounts in the graveyard tombstone of traders that don't use stops. In fact, there's only one thing I have ever found worse than not using stops, and that's selling naked short options. That is a guaranteed send to the farm. People that trade without stops, it takes them a little longer, but they end up at the farm too. So do me a favor and place stops. How could it go wrong for putting an insurance policy on the new car that you bought before you drive it out of the showroom? Put your insurance on. It's called a stop. All right, traders, enough of that. Listen, this video is about trading gold and about the emini S&P. Right off the bat, let's start with the emini S&P, and I'm here to tell you this. Do not, look how big, do not fall in love with the downside of U.S. indices. These clowns in D.C. have tried everything in their power to make it abusive for traders, and not that they're doing that on purpose, but the fact that they're holding up Congress and they're holding up the financial cliff and blah, 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 blah. That's supposed to be a major headwind on our markets. Have you noticed they're not responding on the downside? When you've got this much headwind in front of a market that's just standing there going like this, wait until that headwind moves. Do not fall in love with the downside, and I will show you why on charts. Now, that's for slightly longer term trading. For a Sunday night through Monday, Omni is going to start off with the downside. Omni's got a two-sided trade play. Traders, this is 2013, almost 2014. I've started these videos in 2006. This is the second time I'm coming to you, and they both happened in the last 10 days, and telling you I have a two-sided Omni. Omni doesn't play that. Omni picks a team, bullish or bearish, plays for the bulls all day, plays for the bears all day, unless the market changes complexion, which is rare. So Omni usually has one arrow, but I am telling you right now, it's got to be because of the clowns in D.C., because my charts are telling me play both sides, so we will. Starting off the day unequivocally with the red arrow first. If we get a deep enough dip, we will likely turn around and buy it. That's the emini S&P, and I will show you why. Next, gold. Traders, the gold, if you're not paying attention to charts, the economy, the whole 9 yards, but it should all come out in the charts, let me just tell you that gold is fool's gold right now. It may rally a little when it rallies, but gold needs to be sold. Omni gave the top in gold at 1680 officially on videos in Omni's at a seminar live on the strip, calling for 1680 to have been the highs in gold. After the break, it made it all the way up to almost 2000, came down. When it got under 1720, Omni gave us an official topping call at 1680. Omni called for 1179 since 1680. I kid you not, go look at the charts. We went right down. It hit 1179 and have had this bounce ever since. This bounce has come to an end. Omni says it is time to start selling gold again. Omni's still looking for 900 in gold sooner or later. Not tomorrow, not anytime soon. But since the high was called at 1680, the low is supposed to be somewhere around 900 off that 1680 call. Let's see what we get. Now, we are selling rallies in gold tomorrow, but selling rallies, not selling in the hole and not selling it on the opening. Selling into a decent rally if we get one, because we believe that the highs aren't in gold and you need to be selling rallies. So, traders, two things we will see, well, really three. In this chart segment, I want to show you why you shouldn't fall in love with the downside for long-term view, like over the next week or 2, 3 weeks, but why you should probably want to see some downside action first. You'll see that. So, short-term trading, downside first. Longer-term trading, we like to buy the dips. For tomorrow, we're starting off with the downside. In gold, we are selling rallies. With no further ado, let's go look at some charts. Traders, the first chart we're going to look at this evening is the daily gold bar chart. Now, as I told you, and you all knew this, whoever's been following, 1680 was the official call. It is so far back and it is so high, it's nowhere near the top of this chart. It's way up here, right? So it's way, way past the top of this chart. We come all the way down, we come back. So 1680 was absolutely a good call. Since then, we dropped to 1179 and came back for this rally. And right about here, Omni started to say, okay, looks like we can get back in on the short side. And has been attempting sells all the way through this. Sometimes we get filled, sometimes we don't. But we are looking to sell the rallies here. I showed a bear flag in Omni Camp inside of this head and shoulders. So you got shoulder, head, shoulder, another head and shoulders, the downward channel, and the bear flag. I mean, really, do we need any other evidence here? So the bear flag I showed at Omni Camp a few days back, and I tell them that we should sell it around 1350, and boom, we get this. Falls right out of the bear flag. Bravo on analysis right there, traders. That was a wonderful, wonderful flag projection. Now, I say we have to come down at least to the bottom of this and then probably break that. So we're looking for the downside. Remember, gold's right here right now. So if we get to the bottom, that's a move. We're looking for gold to move down on a daily basis. We are sellers of rally. Then we've got the emini S&P, and this is a daily chart. Now, traders, watch this chart, how it's working here. You come down, you get past the Omni average, you hit the trend line, it starts here. You bounce, you make a new high. You come down, you get under the Omni average for a moment, you hit the trend line, you bounce for a new high. You come down, guess what should happen next, traders? A little bit more pullback, and then boom, we should take off like it did here, like it did here. When it gets to my Omni average and this trend line at the same time, we become buyers. Until then, we are in Oscar's F flag, traders. Here's your F flag right there. It is as clear as the day is long. We are in an F flag, and it's working its way lower. And it looks like that flag comes right to this spot. I mean, that looks like it's going to be perfect when it gets there. So we're looking to buy that dip when it finally gets down there, but we need to be selling into here until it gets down there. So we're starting off as sellers. That's not the only reason, of course. The Omni gave us the go-ahead, and then we found some chart points. But we are going to sell into the F flag until it breaks out of it. Then we've got the Dow Jones Industrial Average, and if you look, same thing. The S&P shows it's got more room. The Dow shows it's got more room just to come down and hit that average. It might seem like a little, but with day traders, that would be a nice trade for tomorrow if we can get it. We are below, and it looks like it might stay. So let's see what happens. On to the next one. Now, here's why I don't want you to fall in love with the downside. We went from a reason to sell on Sunday night through Monday to something different. Traders, look, if we come down just a little bit more, this is a weekly chart. This goes to November of last year. Just right here is November last year. So these bars are very meaningful because each bar is a full 5 days of trading. Support, support, support. Just missed it. You need to come down just a little bit more and hit the trend line support, just like the daily shows us, in fact. On the weekly, a little bit more, and we nail support. And I kid you not, these weekly charts are great for support and resistance. Let's look at the next chart. Traders, the NASDAQ. Remember that this was last week. This week will start this week. All it's got to do is come down to about here, and you know what you've got? You've got a bull flag on a weekly hitting the bottom of a trend channel. That's powerful on a weekly. This is a weekly chart of the NASDAQ. So the NASDAQ shows a little more pullback, but do not fall in love with the downside. Then you've got the Russell, and this is the most clear of all of them. The Russell's got 3 bull flags. Bull flag, breakout. Bull flag, breakout. Now we're in bull flag number 3, right? But look at this. The market closed here on Friday. You need to drop all the way down here to get to the bottom of the bull flag where we should go long, but that's the 1150s. We're at 1175 at the moment. So you can drop 25 points, still be in the bull flag, and still be a great market. Do not fall in love with the downside. That is unequivocal proof. So traders, you've seen the charts. There is my technical argument for why we're going to have a two-sided trade play for Monday. Now, you've seen the daily charts. They call for just a little bit more pullback and then watch out for the downside to be purchased, right? You've seen the weekly charts. The weekly charts call for a little bit more of a pullback. You've got DC. Obviously, they're looking for a little bit more of a pullback. So with their wrangling nonsense, it makes perfect sense that these charts show just a little bit more on the downside before they start to find their legs. Be very nimble when you get short, if you get short on Monday, and remember, as the week progresses, it's probably going to find its legs if it gets down to those trend lines. Traders, I hope this video helps. make sure you come on down to livewithoscar.com. Come see me in my trading room. If you like these videos, of course, I teach these techniques live in my trading room at livewithoscar.com. But if you just want to follow me through YouTube, simply subscribe through YouTube by clicking the subscribe button. And then every time I put out one of these videos, YouTube will send you an email and you'll know that it's out. All right, traders, I'll see you at the site. Don't forget, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, and every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll, traders. 1,087 videos, and do not fall in love with the downside of U.S. indices. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.